If you're on Medicare, or even if you're a few years away from turning 65 and you're thinking of selling a home, then this video is a must watch. Why? Because selling a home can impact how much you pay for Medicare. So I'm going to break all of that down today in a way that is simple, easy to understand, and give some clear examples for you. So stay tuned. So I'm going to start off today by breaking down two important terms that you'll need to know if you're going on to Medicare, even if you're already on Medicare. And that is MAGI. This stands for Modified Adjusted Gross Income. And I also want to talk about IRMAA, which stands for Income Related Monthly Adjusted Amount. So we're going to break down what these are. So MAGI, this is your adjusted gross income with certain things added back into it. Things like tax exempt interest or certain types of foreign income. Now Medicare looks at your modified adjusted gross income from 2 years prior when they are determining what your Medicare premiums will be. So Medicare isn't free. When you go on to Medicare, most people have to pay a premium for their Part B coverage. That's their medical doctor coverage. So Medicare looks at your modified adjusted gross income to determine if you'll have to pay more for your Medicare Part B and Part D premiums. And if Medicare determines that you are a high income earner, then they will subject you to IRMAA, an income related monthly adjusted amount. So the chart that you see on the screen right now shows the IRMAA brackets for 2025. So this is based off of your 2023 modified adjusted gross income, and wherever you fall in these income brackets will determine what you pay in 2025 for your Medicare premiums. So here's the big question I'm addressing today. Will selling a home impact your modified adjusted gross income, which will in turn impact your IRMAA and result in you having to pay higher Medicare premiums in the future? Let's break it down and go over 3 real life examples. Let's give an example of John and Sarah. John and Sarah are a married couple and they are 64 years old, getting ready to retire, and they decide to sell their primary home of the past 20 years. Let's say they sell the home for $900,000, but when they originally bought it, they bought the home for $300,000. So that means that they had a $600,000 gain. So here's the good news. If you're selling your primary residence, then you may qualify for a capital gains exclusion in the amount of up to $500,000 if you're married filing jointly, or up to $250,000 if you're single. So in Sarah and John's case, since they're married filing jointly, they can exclude $500,000 in gains, meaning that only $100,000 will count towards their modified adjusted gross income that Medicare will look at for IRMAA purposes. So this $100,000 will count towards their MAGI, and it likely will impact their Medicare premiums, but it will impact at a lot lower rate than it would have if they had to take the full $600,000 in gains. Example number 2 that I want to go over is if you're selling a vacation or a rental home, so not a primary residence. So let's give an example of Mark. He's 66 years old and he's selling his vacation home that he's owned for many years, and let's say he sells it at a gain of $300,000. Well, since it's not his primary residence, then the entire amount of this gain would count towards his modified adjusted gross income, which is likely going to push him into a higher income bracket for Medicare's IRMAA, which will trigger a higher Part B and Part D premium for Mark. So even if this is a one-time sale of a home, it's still going to impact his Medicare premiums 2 years in the future, keep in mind, because Medicare looks at your tax return from 2 years ago to determine your Medicare premiums in that given year. If Mark sells his home in 2025 and has to take on this gain for his 2025 tax return, he'll see higher Medicare premiums in 2027. And this is the point where a lot of people ask, is Medicare going to hit me with these IRMAA charges for life? No. Medicare looks at your tax return every year and they adjust annually. They look at your tax return from 2 years ago and that's how they determine what your premium will be. And they should adjust that every year. Now, there is something called an IRMAA appeals form. I'm going to link it in the video description below, where you can appeal these higher IRMAA charges for your Medicare premiums if you've recently had a life change and you feel you shouldn't have to pay those higher Medicare premiums for Part B and Part D. So again, that'll be in the video description below. Medicare should reassess every year and adjust your premiums accordingly, but just in case they don't, you'll want to keep that IRMAA appeals form handy. The third example I want to talk about is inheriting and selling a home. Now let's say an example of Linda. Let's say Linda inherits her mom's house when she passes away and she sells the home for $400,000. That's the sale price of the home. So here's the key. When you inherit a property, you get what's called a step up in basis. That means that the home's value is reset to what it was at the time of death. So let's say the home was worth $390,000 when Linda's mom passed away and she sells it for $400,000. Her gain is only going to be $10,000. This $10,000, yes, does count towards modified adjusted gross income, but depending on what Linda's income is prior, it may not push her into a higher IRMAA income bracket. So in all of these examples, it's important to remember that IRMAA surcharges can end up costing you thousands of dollars a year more in Medicare premiums, and they don't necessarily hit you in the year you sell your home. They're going to likely hit you 2 years afterwards based on when you sell the home and when you file your tax return. So to recap, selling a home either before you go on to Medicare or while you're on Medicare may or may not impact your Medicare premiums. It's going to depend on the amount of the capital gains, if you qualify for an exclusion, and when you sell your home. So if you sell it at age 62, it shouldn't account against you once you're on Medicare at age 65. If you're selling it at age 63, it might. Additionally, a sale of a rental home or a home that's not your primary residence that you didn't live in for at least 2 of the past 5 years would likely impact your modified adjusted gross income and your IRMAA. Inherited homes usually don't trigger big taxes due to that step up in basis, but you'll want to check your numbers. Medicare is insanely confusing by design. So what we do here at my office is we help to cut through all of the Medicare clutter and confusion. We help seniors all over the country find the best Medicare plan for their needs. So please don't hesitate to give us a call. We would love the opportunity to help you. Go ahead and leave any questions and comments you have for me in the comment section below. I love hearing what you have to say. Give us a call, share this video, like, subscribe, all that good stuff. Thanks so much for being here, and we'll see you soon.